Stocks on Wall Street deepening their losses following the release of the minutes of the last Federal Reserve meeting. Well, let's get a read on this from Liz Miller. She's president of Summit Place Financial Advisors, coming to us from New York City. Good afternoon, Liz. Now, the Fed apparently sees no reason yet to change policy. It still said that inflation it sees as transitory, but it also said that many participants said that if the economy keeps rapidly attaining, rapid progress, that it might be appropriate to begin discussing tapering. What's your take and your read on this?
Well, the minutes themselves are a bit of a yawn. There's nothing surprising in them, and again, seeing now the minutes from the previous meeting where we've had that release. The issue is from the time they had that meeting last month to now, we've continued to get some surprisingly strong data in some of these areas, and I think that's what investors are disappointed by. You know, the minutes aren't up to date. We're looking backwards, and we really wish we suddenly saw something that gave us an outlook. At the time, the Fed was saying the economy was still short of their objectives. They noted that we have a supply bottleneck that is holding back the economy. Well, that's still very much the case here today. They noted that the labor market recovery is sort of spotty, stronger in some sectors and some demographic areas than others. That's still the case. But what we know is, to balance those things off, we see huge demand from certain sectors of the economy. We see consumer spending and consumer confidence remarkably strong since then, maybe on the back still of stimulus checks, but hopefully on some people going back to work. And that's why I think there is this concern, maybe, that there was no talk of tapering then. The Fed has told us they think this inflation will be transitory, that they think it's from the supply bottlenecks. But that could be the case for a year. And as investors, we've always been very impatient with the Fed. The Fed wants to give things 6 months, watch them flow through the economy, give it time. Investors want action in the United States. They want to see what the response will be now to fix our concern of the moment.
So what was it that upset investors, that the reason why stocks are pulling back further? Is it about that mention of tapering and the market's timetable for tapering?
I think it's a timetable issue. In fact, the minutes comment that some members did think they might need to be talking about tapering at some upcoming meetings. So if anything, that should have been positive. But I really think the problem is that these minutes are so last week, not to mention last month, and they don't address the inflation spike that we saw since then, some of the other strong economic reports that some feel suggest a stronger economy. And they're really looking to hear what the Fed thinks about that data. And these minutes were prior to the reports.
And Liz, today we have Bitcoin falling as much as 30%, other cryptocurrencies falling as well. Commodities continue to fall. Stocks themselves down for the third straight session. Gold jumping to a 4-month high. Are you getting the sense that this market is topping out or perhaps headed for a correction?
We might be headed for a correction. I think we're headed more for a rotation. That's what I see in those. Gold clearly being a safe haven, and it hasn't always acted like that. It certainly hasn't been the strongest, and we've seen Bitcoin suggested by some as a safe haven. Lots of debate whether that is a safe haven and if it's a store of value or not. When we look across the broad market, I would talk about really seeing sector rotation. Today, we don't see strength anywhere. But if we look over the last couple of weeks, we've certainly seen sectors do better than others. We continue to see some of the reopening sectors, like the industrials, doing a little better. We know energy has been remarkably strong, even though there isn't a lot of confidence in the long-term story for energy. So again, I think what we're really seeing is an internal rotation. It might be an internal correction, but I don't see anything troublesome in current valuations or where stocks are pulling back to. Bitcoin is such a difficult question. I think what we've seen in the last day or two that should continue to give participants pause is the difficulties on the different platforms. We saw Binance have to temporarily disable Ethereum's withdrawals. We saw Coinbase having glitches. We hear crypto.com might have had issues. These platforms just aren't robust enough yet, and they keep trying and they keep investing, but you have such a energy intensive and such a big sector still trying to find its footing, that it certainly is a place for the aggressive only.
Our thanks to Liz Miller of Summit Place Financial Advisors. I'm Fred Katayama in New York. This is Reuters.